When should you and when should you not manage your own investments? That's what I want to talk about in this video. So what's up, guys? Welcome back to the channel. My name is Anfernee McLemore, and as you probably read by the title of this video is going to cover how not to get scammed by a financial advisor, but more importantly, knowing when you should and when you should avoid managing your own investments. The plan for this video is to get you on track to understanding how to invest, how to get started investing, and what you should be investing in. So if you think you'll go on and find any kind of value in this video, then hit that like button for your boy, as it really does help the channel out. And the first point I want to talk about in this video is that you should understand how investing works before you invest your money yourself or give your money to someone else to invest. Because when you understand how investing works, you will have a different level of expectations and comprehension of the entire process. On YouTube, you see a lot of times where people go from one penny to millionaires and they tell you how it works, and then immediately you want to do that exact same thing. However, this video is meant to help you get started understanding how to invest and get started understanding how to do it yourself, so that you don't have to pay a financial advisor some big fee in order to invest your money for you, who probably would perform worse than you if you did it yourself, if you follow some of the steps I mentioned in this video. And I believe one of the first steps to understanding how investing works is knowing when to invest. And this answer is simple because it pretty much applies to everyone. And I'm going to use this old poem that I heard, or old proverb, I don't know what it's called, to sort of explain when you should start investing. And that proverb is that the best time to plant a tree was 10 years ago, but the second best time is today. So if you're even remotely considering investing, if you have some extra cash set aside, the best time to get started is today. Regardless of what the market is doing, whether it is up 1,000%, down 1,000%, you should not wait to get started, because compound interest starts as soon as you start. And what I mean by that is that your money starts working for you the second you start investing it. So it starts to earn interest, and then that interest that it earns starts to earn interest, and it begins to compound over time like a snowball rolling down a mountain. So what you want to do is that even if your snowball starts at 1 penny, even if your snowball starts very, very small, you want to get that snowball or that investment account rolling down a mountain by starting it as soon as possible. This goes if you are 18 years old watching this video, or if you're 65, you should get started investing as soon as you're able to. Now, I would recommend someone to wait getting started investing if they have overdue bills they need to pay, if they have a high amount of credit card debt, or if they don't have an established emergency fund of at least $1,000. You still want to give yourself a little bit of financial security and a little bit of comfort, so that you don't need to use the money that you have invested in the short run, so that you can give it every chance possible and as much time possible to grow. So first, pay off any high credit card debt, because the interest that you're going to be paying on those credit cards will be much higher than pretty much anything you earn in the stock market. And then once you do that, make sure you're caught up on all your bills and have an established emergency fund of at least $1,000. And because of inflation, I would say that it should be at least about $2,000 as of 2022. But after doing that, you should absolutely get started investing as soon as possible. And you don't need a financial advisor to tell you that. But now let's talk about where you're going to want to invest your money. And by where, I mean what companies do you want to use in order to invest your money with. Now, in this digital age, there are a ton of companies out there. You have Charles Schwab, you have TD Ameritrade, you have Fidelity, you have Public, where if you sign up using the link in the description, you'll get one free stock. And all these companies offer you the opportunity to invest your money by buying stocks, bonds, and index funds for you to hopefully invest your money in the future. So in my personal opinion, when you're looking for where you want to invest your money, some people lean towards more established companies that have been around for hundreds of years, like the Charles Schwab, Fidelities, and TD Ameritrades of the world. So if you're someone who wants a traditional company, a company that may not be as much with the times as far as being aesthetic and being easy to use, but you want someone who manages a lot of money and probably won't fail, then Charles Schwab, TD Ameritrade, and Fidelity may be the company that you could choose. I say those three as a group because they all offer similar investment options, and honestly, it all comes down to aesthetics, which one that you feel most comfortable using. I've tried Charles Schwab, I tried TD Ameritrade, and I tried Fidelity, and I ended up leaning on Fidelity for most of my investment capital. However, if you want to try out the new kid on the block for something that's a little bit more aesthetic and a little bit more catered to the millennial and centennial mindset, then using apps like Robinhood, Public, Webull, and some other cryptocurrency investing apps like Coinbase may cater more towards your investment needs if you like a simple and easy to use screen and a company that takes aesthetics very seriously when they're doing investing. Now, I know the actual aesthetics of the app may not be all that important to some people, but if they are, then you should consider some of those apps. A lot of these companies offer the exact same services. So if you're just trying to get started investing, I would say pick one that looks the best to you and that you feel most comfortable using, so that you can then begin your investment journey. But now comes the question of what you should actually invest in. Should you invest in the stock market? Should you invest in real estate? Should you invest in cryptocurrency? There are a ton of investment options out there, and when you're getting started investing, you're going to want to make the most money possible in the least amount of time with the least amount of cash. And by doing this, you may be attracted to some more risky investments that promise 1,000% returns, because the idea of getting rich quick and not having to do a lot of work to get rich is so appealing to everyone. But I would recommend, and what I have done for myself is to start off small and start off with investment that you can completely understand. But if you only have a couple dollars to invest, then simply buy brands that you use every day and that you're comfortable with. If you have an Apple iPhone, then buy some Apple stock. Or if you shop at Target or Walmart all the time, then buy some Walmart or Target stock. And the great thing about this is that you don't need to buy the whole stock all at once. You can buy those stocks in fractional shares in $1 to $2 increments. And then once you get comfortable with your small portfolio of understanding how it goes up and down and how the dividends are paid and what to expect when you're actually being an investor, then you can start putting in larger amounts of money into your portfolio and then moving on to this thing called index funds. Now, index funds are what I hold in my portfolio with 99% of my cash, and it's basically a collective group of stocks all put together and wrapped up with a bowl so that you can buy it for one price. So with an index fund, you don't have to buy the Apples, you don't have to buy the Teslas, you don't have to buy specific stocks, because you can buy basically the entire economy in a little slice with one purchase. And as you put more money into the index fund, you would then get more slices of the economy. So this sort of insulates you from a little bit of risk, just in case one of those companies fall. You would then be propped up by the rest of the companies held in that index fund. I have a lot of videos on the channel explaining exactly what is in my index fund, but basically I have a Fidelity's total stock market index fund that tries to cover the total United States stock market. I have a total international market index fund that covers everything that's not in the United States stock market. Then I have a real estate index fund that covers the real estate portion of the United States market. And those three index funds are all that I have in that $30,000 Fidelity portfolio that I have. And as I add more money into it, I simply rebalance my positions out so that they are as close as possible to the percentages that I want them to be. So now the big question, do you need a financial advisor, and how not to get scammed by a financial advisor? Well, my personal opinion here, and this is not financial advice, is that you can get the exact same performance, if not better, from starting your own index fund portfolio and manage it yourself. When you're doing yourself, you have the benefit of knowing that you are accountable for your investments and understanding how it goes up and how it goes down. For someone with a long investment timeline, investing shouldn't be all that hard. You should simply buy assets that you know and trust and that you are familiar with and hold them for a long period of time, because as they appreciate in value and as they pay you dividends, you will begin to get wealthier as you hold those assets. You start to lose money when you begin trading a lot, and most financial advisors and fund managers make money when you buy and sell stocks. They don't make money when you just leave the money sitting in your account. So I recommend, if you're just getting started, the best places you can invest is your own education on how the whole process works, how the stock market works, how to invest. And once you do that, I guarantee you that you will see the need for a financial advisor diminish greatly, because you'll understand how easy it is to get started in doing it yourself. But with all that being said, I really hope you enjoyed this video, and I hope you found value in this video. And if you did, don't forget to tap that like button for your boy, as it does help the channel out. So I hope this video allowed to see that you really don't need a financial advisor to get started investing. And if you do have a lot of money to invest, you probably can manage your own investments if you make smart and responsible choices. So if you enjoyed this video and you want to get a little bit of treat of watch to the end of this video, then go down into the description, where if you sign up to the public app, you will get a free fraction share of a stock just for signing up and pressing a couple of buttons. No need to deposit any money, just sign up. However, I hope you did find value in this video, and I'll see you in the next one, guys.